And we are live, ladies and gentlemen. Welcome to the YouTube channel. This training is usually for our inner circle, but for some reason tonight, um, my my webinar software is acting weird. It's glitchy. I was using it earlier, and people were saying it's glitchy. So I said, well, let's go on YouTube and record it on my YouTube, and then go from there. So tonight you get to kind of like watch it free of charge. So whether if you want to be in my inner circle, DM me, and I'll hook you up to get access to it. So in our inner circle, we meet at least once or twice a week, and we go over a lot of different stuff. We bring different people on. And this week we're going to be talking about a very interesting subject where a lot of people are always talking about, hey man, I can't start my business, I'm struggling, or I got a business, I need to get more money, I need to do this, I need to do that. The fact of the matter is, there's some strategies I learned years ago, way before real estate, where um I had to be able to find these different strategies to finance my business because just going to a bank wasn't going to cut it. So do me a favor, guys, before we get started. Even if you're watching the replay, drop where you're watching from, what kind of business you got, what you got going on. If you're in real estate, if you're a consultant, if you're a coach, whatever you are, just put in the comments, and that way we'll know who you are and how we can get in touch. Because I love to see when people connect. There's so many relationships I helped create over the years and connect people to making hundreds of thousands, if not millions of dollars together by just, connecting people with each other. So I'm here tonight in my office working a little late, and it's going to be a really good presentation tonight on a Monday night. So, like I said, do me a favor, drop where you're watching from. The presentation is going to be awesome. We're talking about how to get business loans and credit, even with bad credit, right? Because once you crack that code and you understand that, hey, my personal credit isn't going to be in a way to get in my business funding, then you're able to really do some things and capitalize your business and take care of things. What's up, Q? Wholesale real estate. Yeah, even like people in real estate, I don't see people in real estate tapping into liquidating their business and getting funding, especially like wholesale. Like if you can show and prove that you're making money and you got consistent money coming into your account for the last 6 months and it's predictable and you don't have overdrafts and things, there's people out here that give you money and give you, operating capital so you continue to invest in marketing, invest in your virtual assistants. You can finance all that stuff if you know and understand that you can create a predictable business. So I think a lot of people got to understand that the power of liquidity is the power of everything in your business. So that being said, let's move on to tonight's presentation. Like I said, how to get business loans, even with bad credit, no collateral, or no cash flow at times, right? So some people, they're brand new, they're just starting a business, they might not have it, um, they might not go to the SBA, they can't do all that stuff. So we're going to show you a few things that I learned over the years to how to do this, and I guarantee you'll learn something new tonight. If you can do me a favor and share this with a few people or share it in a few groups or wherever, that would be greatly appreciated. I didn't even do any marketing for this. I didn't even email it to my list. Didn't even tell anybody. So whoever's watching, that'd be greatly appreciated. We'll keep it up. We're not going to be petty and take it down. So, like I said, most business owners, they think they need to go to the bank when they need money, but that's not true. According to the Department of Revenue, less than 2% of all business loans come from big banks. You know what I mean? So, I personally don't go to big banks. I never went to a big bank. The fintech community has been awesome to a lot of entrepreneurs in the last 5 years. That's giving you alternatives to get money and to borrow money without having to fill out a mountain of paperwork. I think that's the biggest thing, filling out all this paperwork. So the cash access problem, right? Banks deal with very conservative risk, which means like like they're not going to sit there and tolerate a lot of inconsistencies in your business. So they're very conservative, right? And business lending is a very risk. Over 90% of businesses fail, right? So out of 100 businesses, at least 90 of them going to fail in 10 years, right? So that's why even now, us moving forward, like what I've been working on, I've been quiet, is I've been learning how to buy businesses because I'm telling you, it's no easy fate trying to keep starting new businesses and new ideas from scratch and trying to make them profitable. Like, you're going to meet your match one day. So I would rather just underwrite a deal, find a good business and buy it and then go from there. Just like the same way we do with real estate. We buy apartments, there's always cash flow because we don't want the hassle of building from the ground up, all of that good stuff. So, the result is that 89% of bank applications are typically they're going to be denied. And that's just what it is because of a lot of reasons, right? The banks don't feel confident, they're too conservative, they don't want to deal with risky business, they don't want to deal with inconsistencies where owners are taking money and they're not accounting it into the accountant. So when they looking like, yo, you told me you made 300,000 last month, but we only can account for 120,000. Where's the rest of the money? That's red flags to them, right? So you got to understand that if you want to deal with traditional financing, they're going to kind of like put you on a microscope, and that's why most people don't qualify for some of this stuff. So even though most struggle to get money, 80%, 86% of businesses rely on some type of credit or financing for survival per the National Federation of Independent Business. So listen, like I help clients all over the year. Like I don't even brag or talk about this. A lot of the clients I help get hundreds of thousands of dollars. I probably will pass $1 million this year in business financing and funding that I help get a lot of clients with credit cards and things so they can launch and start their business, maintain their business, invest in other different things. Everybody don't have it to go to the SBA, right? And per the SBA, the major reason for business failure is insufficient capital and the lack of adequate funding. So, like most businesses, you're not going to survive. Like I run a virtual assistant company, and I can't tell you how many failed businesses come through our virtual assistant company that hire VAs, and 3 months later they close down doors. 4 months later they close down their doors. They're on to the next thing because they didn't have the amount of capital that they thought they needed to continue to manage and run their business. So one of the things I want to tell people is that the best thing to do is get liquid as possible. Then you go out here and make a lot of money. But at the beginning, most entrepreneurs not going to make a ton of money the first year, 2 or 3 years in business because a lot of that stuff got to go back into the business to keep it going and keeping it, trying to get to the next level. And since most businesses, they can't really get money, that leaves over 9 million, American businesses that need money and can't get it. So 9 million businesses out here, even if you started like an agency where we created a company called Approval, and we really haven't pushed that business yet because we've been working with so many clients in my other businesses. But you can literally create a business that can help people get funding and make a percentage. Like if I was tomorrow to start offering funding, right, and say, yo, I can get you funding, I can easily charge 5 to 10% of whatever I get you funding, and people will pay for it because they don't have no other means to go get the funding. Most of the clients we help get funding, we just do that off the strength of other programs and products that we're working with them with. So we're not really worried about the money. But like I said, if you're looking for money for your business, the great news is, you can still get it. If your credit ain't right, you got a lot of things going on, you still can get the money. There's alternative finances that you can get and you can take care of. Like I said, all the big banks and most of the small banks, they use some type of SBA program as their primary business funding. And these types of conventional banks loans are very hard to qualify, guys. So, if someone's telling you, yo, go get an SBA loan, they're going to be, so many different guidelines and so many different things. It's going to be tough for you to qualify because the SBA, they're going to evaluate all the aspects of your business for you to get some type of approval, right? So to get approved, all aspects of the business and the business on the personal finances must be near perfect, guys. You must be a good saint in order to get this stuff approved. So to get approved for conventional loans, you must have literally excellent personal credit, 780, 760, 750, sometimes 720, but no derogatory reported items, which means no late payments, no charge-offs, no, no bankruptcies, no child support, nothing, like nothing. You know what I mean? Excellent bank credit, and you must keep a lot of liquidity in your bank accounts, 10, 20, 30,000, all depends on the program you want to try to get into. And you must have excellent business credit. But we all know that it takes a few years to build business credit, right? If you're doing it solely with just using the EIN number and the Dun and Bradstreet number, and you're not personally guaranteeing anything. That takes a while to build up and stack up. So, going the SBA route, it's okay. If you 10 years into the business, you have a well-established business, you have a bunch of money in your balance sheet, you're liquid, you're doing everything the right way, you take care of your personal bills, you haven't been late, you've been a good Samaritan, you've been a good steward of money. They're going to look out for you. But like I said, you need to have excellent financials. So you need to make sure your accounting is on point, right? That's going to show good net profits increasing year over year, right? So if you're having a bad quarter, bad month, and then it keeps declining, it's going to be hard for you to get money through like the SBA and all these traditional places. So one of the things I tell people is that try to work on keeping good records, try to work on keeping a good ledger, a good accounts payable and receivable ledger, and just making sure that everything is adding up to the penny, right? And then you'll need some type of substantial collateral to offset whatever you're borrowing. Sometimes it equals to 100% whatever you're borrowing. So they always want to collateralize you. And that's why a lot of people, they love to invest in real estate because the real estate itself is the collateral. So they don't have to go put up their other house or put up their car or put up their life savings to get the real estate. They can just collateralize the actual real estate and the deed of trust. And most people will give you money on that. But other items you're going to need to provide for approval is some type of profit and loss statement, guys. So this must be current within the last 90 days of application, and also supplementary schedules from the last 3 fiscal years. So current and projected financial statements. So this includes in a detail of 1 year projections of income and financing attached to rent explanation to how you're going to achieve this projection. So basically, it's going to show you month after month, like what are we planning on making and how we're going to scale up, what is the projections and how we're going to hit it. Example, like if you're on online e-commerce, like not even Amazon, just like e-commerce in general, selling stuff. What does e-commerce mean? Selling stuff online. That's all it means. So if you're on online e-commerce, you may say, hey, we projected for our sales to kind of go a little flat around August to October because that's when Congress get out and spending slows down nationally because people going back to school, they adjusting back to the normal life. Summer's over with, and then right around Black Friday, Thanksgiving, Christmas, we expect for things to pick up dramatically, and it carries us all the way to tax season, and then into the spring. So that's what like a financial projection statement will look like, and they're showing the numbers and showing different trends and different models of how your business is going to achieve that. Also, business certificates and licenses. So your original business license certificate of doing business. If your business is a corporation, a stamp, a corporate seal, needs to be all on the forms and the paperwork. So making sure you have that. Like example, if you are a beauty salon or something like that, and you're trying to get money, they're gonna want to see all of the certifications and all of that good stuff. So just make sure your paperwork is tight, airtight, and then your loan application history include records of any loans you applied for in the past. That's very important because they can look that stuff up too. Also, your income tax returns. If you're going to be trying to do this SBA stuff, you're definitely going to need to show your income tax returns. Include signed personal and business federal income tax returns of all principals for the previous at least 3 years. I say 4 years just to be on the safe side, but 3 years minimum. If you only had the last two, then you just got to talk to whoever's doing your loan with you to see what you can do to offset the third year. And then resumes, like a regular resume, like you're getting a job, they want a resume to look and see like your consistency in your working history, your business ownership, or whatever the case may be. They want to check that out. And then personal background information, and then a business plan, and most importantly, a business credit report. So you got to go through all this. I'm talking mounds and mounds of paperwork just to get an SBA loan. You know, the income tax returns. Most loan programs require applicants to submit personal and business income taxes for 3 years, and then business overview. So like they provide like a brief history of business and challenges and include any explanations of why the SBA loan is needed and how it will help the business. So you literally gotta. There's companies out here that help you with this. Like they'll go sit down with you and help you craft a perfect presentations to submit to the SBA loan. But like I said, for your personal credit report, your lender will obtain that personal credit report. That's a part of the application process. However, you should obtain a credit report from all three major credit bureaus before submitting a loan application, just to make sure there isn't any discrepancies or anything that can stand out that can deny your application. Why would you want to submit a loan application before your lenders? Because if you see anything that's a little shaky or dicey, and you're like, yo, I don't know about this, you can easily withhold or pause submitting that loan application, because when you pull your own credit report, it counts as a soft inquiry versus, you go let somebody pull your stuff and now they give you hard inquiry and you get denied anyway. So I definitely say you want to be really particular about your inquiries on your personal credit report, so you won't be burning through them, because a lot of lenders, they will automatically deny you if you had too many inquiries recently. So you just want to make sure that all that's taken care of, or any inaccuracies or blemishes on your credit report can hurt the chances of getting a loan approved. So make sure that you try to clear those up before applying to the loan. And then, like I said, qualifications, business lease, bank statements, business certificates and license, and loan application history, and then some type of proof of collateral, right? They always want to collateralize the loan just to make sure that it's a good deal for them. So, you need to have all your legal documents in together, right? Depending on the loan specific requirements, your lender may require you to submit one or more legal documents to make sure you have the following in order, right? So your business license registration, articles of incorporation. Everybody on here, if you call yourself entrepreneur, you should have your articles of incorporation, copies of contracts that you have with third parties, any type of franchise agreements. If you work in a franchise, somebody, commercial leases, whatever that you have can justify that you're a solidified, bona fide business, I definitely will include in it. So, like I said, that's a lot of stuff. I know you guys ain't get on here to talk about SBA, because I don't even do SBA. Like, I don't. That's just too much paperwork for me, right? So, as a result of this, man, most business owners, they struggle to get approved for their financing because their business ain't perfect. I'm not perfect. You're not perfect. Most people won't even be approved for what the SBA requires, right? They don't have the collateral. They don't have the cash flow to need it to get approved. So I don't think that the SBA route is a good route for you. But let me tell you something. There's good news. There's a lot of funding options outside of the conventional bank and SBA loan, right? Alternative finance is one of the most popular options available today, right? You can even get business credit regardless of your personal situation. So what is alternative business financing? Most alternative sources will lend you money based on your business strengths. So if you have a strength, you can be approved. So the three strengths you need, one of them to get approved include cash flow, collateral, good credit, good personal credit or business credit, but you need some type of good credit. So, either way, if it's personal or business, you need that. And like I said, it takes you about a good 12 to 15 months to build business credit, and you could do that solely using an EIN number and, build that up. And most times you don't even have to, personally guarantee a lot of the stuff that you can get approved with your business credit. So cash flow finance is one of the most popular types of financing today. Most ads relating to business financing with bad credit and those startups is a form of cash flow financing, right? The two most common types of cash flow finances are merchant advances and business revenue financing. So when I had my first business, I got a merchant advance where they looked at your credit card sales, whatever sales you got, and they lend you money based on, the last 3 months of your credit card sales. And then what happens is they integrate that credit card sales to like they take money every time you make a sale. So it's not like your business is stuck having to pay a big loan every single month, even if you're making money on that. The beautiful thing about a merchant advance is that you only pay on the loan as the business makes the credit card sales or whatever. So sometimes they may say 10%, 15%, 20% of the sales that you make, they take a piece of that and go out to that. So that's the most important thing that I want you guys to understand, that if you are not taking credit cards right now, if you own a business and you're not taking credit cards right now, I definitely recommend start to take credit cards. and then go from there. If you're just using like Cash App and Zelle Pay, Venmo, stop doing that. Unless you're now I do recommend doing that. And most people say, oh, you should never do that. If you're doing high risk transactions, like transactions where people can kind of scam you and do chargebacks and take like you selling digital products or selling digital goods, and you just want to make sure that you are able to avoid frivolous customers, then do it that way. Just make sure you actually punch up an invoice for them, and then on the invoice you say they paid by this method of payment. You know what I mean? So that's the biggest thing I can tell you. Now, with the whole Cash App thing, talk to a lawyer about it and see where you at with the legalities of it. But definitely, always give a customer an invoice. Also, the cash flow financing qualifications to get approved for cash flow financing, you need to be able to show at least 6 months of business bank statements and merchant statements, right? These statements must reflect that your business make over $120,000 a year in annual revenue, or about around $10,000 monthly. That's the sweet spot we see when people want to give you cash advance or merchant advance loans. So you can also get the merchant advance loan with $5,000 with 5,000 in credit card revenue monthly. So if you're taking credit cards, literally, like if you're having a product or a digital product or something, if you're doing $5,000, somebody will give you some money on it. They might give you 5,000 on it, then you got to pay it back in 8 months, whatever. You end up paying 7,000 back or whatever. But if that 5,000 go towards marketing or help your business take off, then guess what? It is what it is. Also, you need to be in business for 1 year to qualify. So one of the things I recommend, guys, is that as soon as you get an idea in your head about a business, man, run down to the LLC business and create that LLC, buy your domain, get listed on 411, do all the little nuanced stuff that shows that, hey, you had this business since, February or January or last November, that 1 year come around so fast, within the first year, you start qualifying for a whole lot of products, especially, if you start early building your business credit, you'll do really well with getting a lot of approvals without using your social security number. Also, you can't have more than 10 non-sufficient charges, like overdraft. You know how like your car got $10 on it, then a monthly subscription recurring revenue charge you $40 for whatever the subscription you signed up for, and then put your account in a negative $29, and then the Bank of America charges you $35, and you wake up and your account in a negative $70. Like you're like, yo, what the hell happened? Right. So you want to, as an entrepreneur, you want to stay away from putting your card in the negative as much as possible. One of the things I would recommend is to probably use a bank like Brex. They really dope and good because they won't let you put your card in negative. Even ain't no money in there, you just ain't going to be able to, transactions ain't going to go through. So, for you, it looks better that your card's not in the negative than, you see all these different overdraft charges. Like that's why I got away from Bank of America, because they used to do these little games where they pin stuff for more than 4 or 5 days, and it shows your available balance, and you thinking you got more than what you got in your account. And the next thing you know, on the fifth day, you wake up and it's negative $200-300. That's why, as an entrepreneur, you should never keep low liquid amounts of your cash reserve account or accounts or operating accounts that money coming in and out there every day. I definitely recommend keep something in there. Also, what is revenue lending and merchant advances? They short term loans, usually 6 to 18 months. Uh, you can get between 10 and a half $1 million, $10,000 to $500,000, and then loans amounts equals to 8 to 12% of annual revenues, and then rates between 10 to 45%. Jesus Christ. 45%. And then 500 score credit score is acceptable. So if most people listen, guys, the lowest credit score you can get is 350, right? Then the highest credit score you can get is 850. So you have about 500 points to play with in between having the turbulence credit score and the perfect credit score. So that's about and 50 points that you need to kind of keep up with to stay at 500, which means that even if you ain't paying your credit cards on time, whatever, you still can kind of hover up to around 500. So just I'm not saying do a terrible job with your credit. What I'm saying to you is there's not that many excuses why your credit should dip less than 500. But you should just be on reckless and trifling with your credit that you care not to pay anything towards your credit. Your credit cards, any bills, or you just don't pay your hospital bills and they just keep reporting it constantly to the credit bureaus. And if you need something like that, reach out to us. We can help you out. But let me tell you something. Personal credit isn't a big factor in qualification. If you're not currently in trouble now, such as being in bankruptcy or having judgments or liens, you can get money super fast in as little as 72 hours. Approval is easy. It's just a quick bank statement review. So you can easily renew your advance and get more money within 24 to 40 hours with the review of 2 months of bank statements. Once you pay down 50% of your initial advance, you can get approved when you get denied with most other sources. This is just one of the forgiving business lending options available today. So just know that, okay, if you know you're going to continue to need money to scale your business or grow, or scale your Facebook ads or your TikTok ads or whatever, or you're paying influencers to promote your business or products or digital billboards or whatever you're using for marketing. Everybody has some type of marketing experience. You can't sit here and tell me you're an entrepreneur, whether you're a wholesaler, real estate investor, business consultant, coach, whatever. You can't sit here and tell me you're a business owner and operator if you're not investing in marketing. And sometimes that might just be you hiring a VA to do cold calls. Sometimes that may be you hiring a VA to help build funnels, and then you just run Facebook ads to them funnels and sit back and let the leads come to you, and you just get on the phone for the appointments to try to get you some deals and get you some customers. So collateral-based financing, let's talk about that real quick. Uh, Acceptable collateral-based financing. What is collateral? Accounts receivable. So if you take payments, if you take customers and give them like net 30, net 15, or let them pay on invoice net 30, net 15, net 45, whatever. That's accounts receivable. If you have any stocks, bonds, or securities, like your company invests in stocks or bonds, or your personal self invest in stocks or bonds, you can do that. If you hold inventory, maybe you own a electronic store and you have $80,000 worth of inventory on you at any given times. You can use that. If you have some type of purchase orders, there's so many acceptable ways of collateral that most people don't even understand that is collateral, and it's good collateral that they can leverage against. Also, equipment. Maybe you run a tow truck company. You can use your tow trucks, or construction company. You can use machinery, bobcats, backhoes, whatever the case may be. Real estate. Maybe you have a rental property portfolio that's kind of almost paid down. You can collateralize costs, collateralize debt. Maybe you worked in the government and you have a nice, healthy 401k that you've been stacking up for the last 20 years. You can cross collateralize that. There's so many ways you can, collateralize these different little assets to get some financing to get your business going or to continue to push your business forward, right? So up to 80% of receivables is forwarded. 1 year business is required, and then must be receivables from another business or the government. And then the rates on this is between 1.25% and 5%. So it's not as bad as the other one where I think it's between 10% and 45%. Jesus Christ, 45% interest. I can't imagine somebody paying that. But 70 to 90% loan to value of stock value, rates as low as 2 to 3%, and then working capital line of credit, right? And then, if you got bad credit, it's okay. They'll work with you. And then your minimum inventory loan amount is 150,000. Your general loan to value cost is 50%, and then inventory will have to be 300,000 plus. No lump together inventory like office equipment. Rates are normally 2% monthly on the outstanding loan balance. Examples of companies that might qualify include a factory or a retail store, like I said. So between they give you between 5,000 and 500,000, and you can get up to 95% of your existing purchase orders advanced, and you'll be issue a letter of credit. 401k financing, 401ks or IRAs can be used up to 100% financing rates, usually less than 5%. You're basically investing your 401k into your business instead of buying stocks and other businesses. There are no tax modifications based on proven IRA strategies. So, like, a lot of people, like, if you just got a 401k sitting there, you want to invest in real estate, e-commerce, whatever the case may be, the first thing you could do is just tap into your 401k and then use that to invest into your business, and then you just pay your 401k back, with interest. You good to go. You can make money on it. And then commercial real estate financing. This loans between 75,000 and $20 million. Get up to 55% loan to value for refinancing, 20 to 30 year terms, and then rates from 4 to 8%. And then a 650 FICO score is needed. I definitely say now, since things are tightening up, I definitely say a 680 probably be a little more conservative, just to be on the safe side. And let's talk about credit-based financing, right? Approval amounts, right? I hope people get between 100 and 150,000. Business credit reporting, excellent personal credit with open revolving credit, low increase. Remember I told you guys low increase, that most people don't like. If you're trying to get funding through your personal credit, whatever, you want to keep your increase as low as possible, because like, except for like when you go to Amex, they're not really tripping off increase. You can get a Amex Platinum approved with 720 with 8+ increase. They don't even care about the increase. Approval amount similar to current limits, and then credit partners, okay, so they'll let you have a co-applicant or somebody that can step on with a better file than you to build it up. So listen, contact me if you want to learn more about how to do this. If you can't do this on your own, you want somebody to hold you by the hand and do this for you, we definitely can get you these business loans, even with bad credit, no collateral, or no cash flow. Like I said, if you're interested in anything, you know what I mean, just give us a call, right? Text me at 202-335-3322 for virtual assistance starting at $4 an hour. Listen, if you need help launching your REI business, we have an amazing program called Business in a Box. We've been helping entrepreneurs for the last 3 years set up their business from start to finish. We come in, do all of the hard work for you, hire all the VAs, put you through all the training, the team through all the training, set up your marketing, open up your marketing, pick your zip codes, set up everything from A to Z. If that sounds like something you want to do, you want to invest in yourself, definitely give me a call at 202-335-3322. Actually, give me a text. If you want to get business funding and business credit, text me right now. If you want to invest in an e-commerce store, text me right now. We literally a one-stop shop. We have everything you need to be where you want to be in life. If you're watching the replay, do me a favor and continue to comment and like and share this video if you find this information valuable. Like I said, this is typically stuff we do for our inner circle class, but for tonight, we decided to put it on YouTube just so you can get a little taste of it, because our webinar software is acting weird, kind of. I don't know what's wrong with it. So we'll get that checked out tomorrow to see if it's good. But other than that, I appreciate you guys. I'll be back. We have plenty of content. I took a few months off to kind of like, get myself together. Now I'm good to go. One of our businesses we've been trying to relaunch, not relaunch, but like we had to literally change our whole strategy in the middle of the year, which is crazy. But it's fine. We good now. Sales coming in for our customers. We're getting everything back together. We're restoring order. Everybody's good. So at the end of the day, you're not an entrepreneur until you face adversity. And once you face adversity and you know how to deal with it consistently, you're good to go. You'll survive this. But one of the things you got to do is stay liquid. Stay liquid. If I can give anybody advice out there, try to stay liquid as possible and try to not start businesses from scratch if you can. If you can put yourself in a situation where you can partner with somebody on an existing business or buy an existing business, do that first. Starting a business from scratch, man, is playing with fire. That's just my opinion. Playing with fire. Other than that, guys, I'm not gonna hold you too long. I know it's a little late. It's 9 o'clock. I still got work to do. I just wanted to drop this little, sauce on you, this little free information, and do me a favor and like. If you're not currently subscribed to my YouTube channel, subscribe to my YouTube channel. Like the videos. It helps us with the algorithm reach more people. And I see you very soon. I think I'm gonna go live for the next 5 days straight and just drop information and just drop value. It's the end of the year. This is the fourth quarter. Let's finish strong, and do what we need to do to continue to be successful. Other than that, man, talk to y'all soon. Appreciate y'all.